Hello everyone, welcome to Global Online. This is Dr. Swati is here. Just give me confirmation that I am audible and screen is clearly visible to you, so we can start our today's session as early as possible. Okay, so screen I'm scrolling. Screen is clearly visible and voice is okay. So let's start today's session. So a very good afternoon to everyone. Welcome to Global Online. I'm Dr. Swati is here. So those students who are preparing for the UGCNET June 2025 preparation, especially for the Commerce and Management subject. So this is we are running our marathon session in twice in a week. So this questions, I think this questions will going to be helps you for your better preparation. Okay. So this is our days 10. We are continuing, we are completed over here day 9 lectures over here. Now today's is day 10. So let's start with the begin with the first question which is in your screen, and I am expecting that you are picking your answer in the chat box. Okay, so read the questions carefully, understand the concept. I am here to explain each and every concept very clearly. That will help you in your examination. Okay, so let's move toward the first question which is in your screen. That is question number 1. A person by whom income tax or any other sum is payable under the income tax is called. Yes, I know that this question is not for those students who are preparing for the management, because they do not have the subject of income tax. Okay, so here the 10 questions are from the income tax, and after that there will be another questions. Remaining questions are from the all the units. Okay, so most of the students are demanding for the especially for this unit. That's why I'm putting 10 questions from the unit of income tax. Okay, so first question, that is a person by whom income tax or any other sum is payable under the income tax is called. Option number 1, an assessee. Option number 2, person. Option number C, taxpayer. And option number D, all of the above. Have you understand what is the meaning of this question? A person by whom that income tax or any other sum is payable. Okay, so those person is called as, in the definition of income tax, in the books of income tax, is called as what will be the right answer? Mark your right answer in the chat box. Just put on your answers in the chat box so I can explain the things in a very deeper way, or either it's depend if your concept is clear. So I am moving toward the next question. Okay, so yes, option number A, that is an assessee, is a right answer, because in the Income Tax Act 1961 the specific definition of an assessee is given. Okay, and this definition is a person, the assessee is a person by whom the income tax or any other sum of the sum is payable under the Income Tax Act 1961 is called as an assessee. And the assessee, it may be an individual person, or maybe an company, or maybe an firm, or maybe an HUF or etc. Okay, so the person, a broader term, if we say in the broader term, covering, it's cover the individual person, it's cover the company, HUF, firm, etc., but not necessary subject to the tax. Okay, SAC, if the person is called an SAC, that means it is he, that person or that company, that things will be payable, or the subject, it's not necessary, it's not subject to the payable a tax. Okay, so this is a an assessee. Okay, now who is a taxpayer? So taxpayer is general terms for anyone who pay tax, but assessee is a legal term we use in the income tax. Okay, so I think you get confused in this and word assessee and taxpayer. Yes, but in general term, the person who is paying the tax we called as a assessee. Okay, but if I use a legal term, so in the legal terms of Income Tax Act 1961, it is called as an assessee. Okay, so the most appropriate answer is, if I say in the legal term, so it is, the right answer will be assessee and assessee. Okay, okay, can I move toward the next question? Oh yes, मैम हिंदी में नहीं है क्या क्वेश्चंस? डू यू, आपको हिंदी में एक्सप्लेनेशन चाहिए या हिंदी में आपको ट्रांसलेशन चाहिए? प्लीज क्लियर दीपिका. Okay, so what do you want? Clearly mention in chat box. What do you want? Either you want a question is which, जो आपको ट्रांसलेशन चाहिए हिंदी में, या फिर उसका एक्सप्लेनेशन चाहिए. ओके, okay, moving toward the next question. So the SAC will be the right answer. Okay, yes, this will be the, this is the way you will get all questions explanation in clearly. Okay, okay, moving to before moving to the next question, I have a great news for you. That is, our new batch will be started from the 5th of May. Okay, this is the right time you have to join join this class, because here you will get all the daily live lectures over here. If you are unable to see the live lecture, you can see the recorded session is available. Here you will get complete syllabus notes in PDF format, and here we are completing 100% syllabus along with the revision. Okay, revision, and this revision we are taking. Okay, okay Deepika, if you want this questions in the in Hindi, so I will mention it in the next session, from the next session. Okay, okay, here you will get a revision along with your PYQs. Analyzing of this PYQs, we make most expected MCQs, and this MCQs will help you for your better preparation for your examination. Okay, so don't skip this, and here you will get full syllabus mock test. This will mock test help you to for your time management. Okay, and the 4000 plus MCQ series and PYQs with detailed explanation. If you register yourself for the paper 2, you will get all course in rupees 8000 rupees. Okay, and plus here you will get paper 1 free of cost. Okay, so once you get paper free of cost, so here you will get complete package of your paper 2 and paper 1. So if you have any query, if you want more discount, so you can contact to this contact number, they will help you. Okay, so how do you download the Global Online? Just go to Google Play Store, download the Global Online, then you have to register with your register mobile number. Once you register, you can search the my course section. In the my course section you have to register, you can see the demo session that will help you. Okay, and here you will get all the sessions unit wise folder you will get, so it will help you to prepare one by one unit wise over, and recorded session, recorded lectures is available over there. MCQs, PYQs, mock tests unit wise is available, not only for the paper 2 plus for the paper 1. Okay, so yes students, moving toward the next question that we have. The next question which is in your screen: pension received by the independent family member of the deceased employee is taxable under the head of, okay, under the head of option number 1, option number income from salary, option number B income from other sources, option number C income from business and profession, and option number D income from capital gain. Income from capital gain. Okay, so question, understand the question. In this question it says pension received by a deceased employee's dependent family members is categorized as a family pension. Okay, so under this is given in your Income Tax Act 1961. So it is not considered under the head of salary because the employment relationship cease upon the employee's death. That's why. Okay, and whenever we are talking about the family pension is taxable under the head of income from other sources. Yes, not in the income from the salary, since the recipient is not an employee of the payer. So in this, the deduction will be available to them in the head of family pension, okay, which is given in the section 57 second A. Okay, here they will get rupees 15,000 or the 1/3 of the pension amount, 1/3 of the pension amount, whichever either this or either this, whichever is lower. Okay, so that's why here right answer for this question is income from the other sources. So the pension received by the dependent family member of the deceased employee is taxable under the head of income from the other sources. Get it? Okay, so the right answer for this question will be income from the other sources. Understand? If you are not understand any concept, if you want to, I have to repeat this, so you have to chat in the chat box. Okay, then the next one, the next question is match the pair. Okay, so first one, that is list number 1 is the description and the list number 2 is about the section. So which section include which thing is asked. Okay, so first one, that is your residential status of an individual. This is most important question. Okay, most important question, because section every year when I analyze the whole question paper from the last 12 year, I have found that there is this kind of question, at least one question they ask in each paper. Okay, now residential status of an individual, this is given in the section 6. Okay, so in the section 6 of Income Tax Act 1961, this define the residential status of an individual based on the number of days. How many? The number of days he or they stay in India. They stay in India. Okay, so this is, you can match with section number 6. In the section 6, residential status of individual is given. Agriculture income is given in section 10 subsection 1. So the section 10 subsection 1 of Income Tax Act 1961 say that the exempt agriculture income from tax, but it is considered the rate purpose if the individual have the other taxable income. Okay, yes, the agriculture income is exempted from the tax, but that person, that individual person is earning from the other sources, so he has to mention his income, agriculture income. Okay, but is fully non taxable. Okay, now the house rent allowances. So house rent allowances you can easily match with the section 10 subsection 13a. Okay, so it's provide exemption for the house rent allowances, that is HRA. In the short we said HRA, house rent allowances received by salaried individual subject to the condition under the rules of 2A. Okay, sorry, not bracket, only 2A. Okay, now the next, that is a gratuity. So you can easily match the section 10 subsection 10. So govern the tax treatment of the gratuity, allowing exemption under the certain limit. Okay, there is a specific limit for the exemption in gratuity. Okay, exemption in gratuity. So right answer will be option number B. Then the next question. Long-term capital gain is chargeable at the rate for the assessment year 2018-19. Actually this is for the 18-19. There is not necessary that they will ask the question for the current year. Okay, they may be asked from the past year, the previous year. Okay, so in the assessment year of the 2018-19, the financial year will be 2017-18. So the long term capital gain will be taxable at the rate 10%, 15%, 20% or 30%. So right answer will be 20%. Okay, now it's increased to 30%. Currently the taxable income, the charges tax on the long term capital gain is 30%. Okay, and in the long term capital assets are like your land, building, unlisted share, gold. Okay, then moving toward the next question, that is section 5 of Income Tax Act 1961 is deal with the residential status of assessee, agriculture income, scope of total income or perquisite. Section 5 of income tax. So section 5 of income tax is based on the residential status of an assessee. Okay, for the resident, global income is taxable. So this global income is received by the income received or either on the basis of accrued income or arising in India or outside in India is taxable. Okay, for the non-residents NRA, only the income received or accrued or arises in India is taxable. Okay, and for the residential but not ordinary resident, for the ROR, RNOR, Okay, for him the income received or accrued in India is taxable. Okay. Next question, the assertion and reason is given to you. So in the assertion, when person reduce his total income by making false claim to reduce its taxable liability. When person reduce his total income by making false claim to reduce its taxable liabilities, reason is given that tax evasion is illegal in India and may result to penalty and prosecution. Okay, so here when person reduce their taxable income by making the false claim kinds such as your you can say this false claim may be your inflating deductions, okay, maybe your hiding income, okay, then falsifying expenses, okay, so it considered the tax evasion. So these are we call tax evasion. Okay, so the primary goal of the tax evasion is to reduce the tax liability by doing illegal things illegally. So this is called tax evasion. Okay, so yes, option number 1 is right, that is assertion is true. When we are talking about the reason, so reason tax evasion is illegal in India, this is true, and under the Income Tax Act 1961, individual or the business found guilty for the tax evasion, and the penalty for the tax evasion, if someone is found to be the guilty for the tax evasion, they are suffering the penalty under section 270, under section 270A and 271 for underreporting and misreporting income. Okay, now the precautions under section, some precautions are given, which is this precaution prosecution, sorry, so this prosecution is given in under section 276C. okay, so this section numbers are important, okay, write it down, okay, which can lead to imprisonment and fine. Okay, so the both assertion and reason are correct, so the option number 1 A will be the right. Now the next question, there are the 3 statement is given to you in this question, and you have to find out which statement is true and which statement is false. First statement, the assessee is always a person, but a person may or may not be an assessee. Isn't it true or false? Statement number 2, a person may have the assessable income but may still be an assessee. A person may not have assessable income but may still be an assessee. Isn't it true or false? Third statement, that is assessment year and previous year cannot be same financial year. So first statement is that assessee is always a person, but a person may or may not be assessee. So this statement is true because not every person in an assessee unless they fall under the tax net. Okay, so yes, the first statement is true. Second statement, a person may not have accessible income but may still be an assessee. Okay, so yes, this is also true statement. A person may not have accessible income but may still be an assessee, because even if a person does not have a taxable income, then may still be an assessee, and they are liable for the advance taxes, TDS, or the other taxable obligation. They file return voluntarily. Okay, so this statement is true. Now assessment year and previous year cannot be the same financial year. So when we are talking about the assessment year, is the year in which income is earned. Yes, this is the assessment year when in which year when you in which year income is earned. Okay, and in the financial year, in the previous year, in the assessment year, just sorry. Okay, previous year is a year where income is earned by the assessee. Okay, income is earned by the, in which year income is earned is called as previous year, and assessment year is a year which is the immediate following year in which income is assessed and taxed. Okay, so however, in certain specific cases like a newly set up business, or in case of death of assessee, previous year and assessment year can be the same. Okay, so there is a possibility, if this is possible, it can be a same. This is possible when there is a newly started business, in the condition of newly started business. So statement number 1 and statement number 2 is true, and statement number 3 is false. So the option number B will be the right answer. Then the next question, the rate of tax that is leviable on the short term capital gain arising from transfer of equity share of company is the assessment year 2018-19. So whenever we are talking about the short term capital gain, this is in the short form we say STCG, short term capital gain. This short term capital gain on the transfer of equity share of a company listed, it's to be listed to the on the recognized stock exchange, are taxed at the specific rate. This is given in the section 111A, and the amount of the applicable for the tax rate is 15%. Okay, plus surcharge and cease. Okay, yes, so this is option number B will be the right answer. Then the next question, here we have completed income tax question. Now moving toward the international business, IB unit, international business. Okay, now which of the following is not the member of the SARC? So you know that this is simple question, but the Afghanistan, Nepal, Maldives and Mauritius, this is what? So first of all, you told me you have to tell me that is who are the member countries of SAARC and what is the full form of SAARC? So full form of SAARC is South Asian Association for Regional Cooperation. This is the full form of SAARC. Okay, so here are the Afghanistan is a member of SAARC. Then after that, second number Bangladesh. Then third one Bhutan. Then fourth one India. Then fifth one Maldives. Fifth, in the position of fifth. Then Nepal in sixth position. Then in the seventh position Pakistan. Then eighth Sri Lanka. These all the members of SAARC, but this is not a member of SAARC. This country is not a member of SAARC. So right answer will be D, option number D. Okay. Then the next one, with the regards to WTO, World Trade Organization, subsidies are covered in two separate economic law agreements. Which are they? Option number 1, the Reform Treaty and the Treaty of Rome. Option number B, the NAFTA and the Organization of American States of Carter. C, the IMF's Articles of Agreement and the European Central Bank Statute. D, the GATT and the Agreement of Subsidies and Countervailing Measures. So first of all, when we are talking about the WTO, so in the WTO's framework, there are some subsidies are mainly regulated by the WTO. These are the subsidies are GATT GET. Okay, so this GET is General Agreement on the Tariff and Trade, and this GET is which lie the foundational principle of trade and rule around these subsidies, and this subsidies is called the Agreement of Subsidy and the Countervailing. So the GATT and the Agreement of Subsidy of Countervailing, this measure and this cover the economic law of agreement, which is covered in two separate subsidies under the WTO. Okay, so these subsidies which is specially address the regulations of subsidies and how the government may contradict the unfair subsidy practices, that means countervailing duties. Okay. Okay, let's move. So right answer for this question, that is option number D. Okay, option number D. Do you want to keep going this more question like this? Okay, so you have to type yes in the chat box. Okay, the next question. Assertion Assertion and reason. Assertion: banks globally are facing more challenges now, and macro sustainability is a necessity but not a sufficient for the sustainable economic growth. Reason is giving behind of this, that is putting regulation in place is the only one part, and their implementation is equally important for achieving the growth and sustainability. Okay, so the assertions reflect the current global scenario where banks are under the pressure from economic volatility and digital transformation and the regulatory demands. So merely achieving the economic stability does not ensure the long term inclusive equitable growth. Okay, so here now the reason is given. Actually, reason explain these by the emphasizing the regulation must be implemented effectively, not just designing, and also for the poor implementation undermining the benefit of the well-being policies. And this is which is exactly why the macro sustainable alone is not enough. So the reason provide the reasoning behind of this assertion, that's make the option A will be the right answer. Both are correct. Okay, because in the assertion the bank globally are facing more challenges now, and the macro sustainability is necessity but not sufficient for the sustainable economic growth. So yes, this is true. Okay, because in the current global scenario where the bank are under the pressure, isn't it, for the economic volatility and the digital transformation, and also to regulate the demand in the market. Okay, and the reason is giving putting regulation place is the only part, and their implementation is equally important for achieving the growth and sustainability. So this is true, because most of the time they are only emphasizing that regulation must be implemented effectively. Okay, so yes, both the answer will be the option number A will be the true. Now moving toward the next question, which is, that is two list is giving to you that you have to match. Okay, so match the factor of business environment in list number 1 and the respective classification in list number 2. So the stakeholders, you can easily mark the stakeholder with non-economic environment, because stakeholders include the social, cultural and political actor. Okay, so this is your stakeholder. Now market intermediaries, so in the market intermediaries you can match with the macroeconomic environment. These are part of firm's immediate external environment, where include the suppliers and the distributors. Okay, now the next one, that balance of payment situation. In the balance of payment situation you have to match with, this is your internal environment, because this balance of payment, that means BOP, is directly affect to the business strategy. Okay, and hence the place is internally in some of the model. Then demographic factors, you can easily match with the macroeconomic environment. So demographic factors, the demographic trends to influence the labor market and consumer base at a macro level. Okay, so you can easily mark option number B will be the right answer for this question. Okay, moving toward the next one, that is your Current account balance refers to net flow between Current account balance refers to the net flow between home country and foreign country of goods, services and income. Okay, so when we are talking about the current account balance, so current account balance, you can easily, what is the current account balance. So current account balance is refers to which is directly you can connect with or you can relate with balance of payment. So in the balance of payment there are three things. That is first one that is trade in goods. Okay, and second one trade in goods and the trade in services, and third one secondary income. Okay, so current account balance refers to the net flow between the home country and foreign country of goods and services income. And so this goods, the flow between from the whenever your there is an whenever we see the net flow between the home country and foreign country, that means it's directly related to the import and export. Okay, and when we are talking about the import and exports, you can the country create a balance of payments account, and in the balance of payments account there are the three things. First one, that is they either they transfer the goods, either they transfer the services, or either they transfer the income and the other thing. Okay, now before primary income there is an before secondary there is a primary income. Okay, primary income, and fourth one, that is secondary income. Okay, trade in goods. In the trade in goods, that means when exporting and importing. Okay, and trade in services, when you make a trade or exporting trade, tourism and software, etc. Okay, and in the primary income it's include kinds of wages, investment income. Okay, and in secondary income, which include gifts, remittance, foreign aids, so when we are talking about the current account balance, refers to the net flow between the home country and foreign country. In case they transfer, we write in the balance of account, we make a transaction of goods and services, exports of export and import, income and the gifts, not a taxes, not a valuables, not a claims. So the gifts, so gifts comes under the head of secondary income in the head of balance of payment. Okay, then the next question, A statement and reason is given to you. That is A, in the context of the globalization, the most important challenge facing India is to boost export. Now what is the thing of which is means that boost export? So boosting export is a major challenge and the priority of India in the globalized economies, because it helps to improve our current account, and this current account is nothing but your balance of payment account. If there is seen any kind of in the balance of account there is a deficiency in balance of account, so the W World Bank, okay, so IMF helps to the company to get improved from your deficit. Okay, they give the loans when they will see there is a deficit in the balance of payment account. Okay, so that is boosting export, that which export fuel the economic growth. Okay, by simultaneous industrial production and enhancing the competitive and attracting the foreign investment. Okay, and this boosting export, it may increase the country's growth rate. This is true. Okay, this is all happen because of they are logically explaining, the reason is all logically explaining the assertion. Okay, so yes, option number A will be the right answer. Next question. Possible impact of WTO, World Trade Organization, on various aspects of Indian economic. First one, quantitative restriction will be allowed. Second, hand car will be imported. There will be dumping of Chinese goods, increase in population, child labor exploitation, unemployment will increase. Which combination is appropriate? So, possible impact of World Trade Organization on various aspects of Indian economic is affected by the first one, that is your second hand car will be imported. So under the WTO norms, trade liberalization allowed import of second hand goods, which also include your vehicles. Okay, and this may lead to increase in competition in the domestic market. Okay, in the domestic market. Now the next one, that WTO leads to the trade. The next one, that is there will be dumping Chinese goods. Okay, so dumping Chinese goods, this will the WTO lead trade openness can lead to dumping, where countries' unemployment will be increases due to this. Okay, so this one will be comes. Then the next one, that is unemployment will be increases due to this one. So unemployment increases, this is possible side effect due to increase in competition, especially for the local industrial that cannot compete with the global giant. Okay, so the right answer will be option number 2, 3 and 6. So 2, 3 and 6, option number C will be the right answer for this question. Okay, then next, internal environment of businesses include all of the following exception: company's culture, customers, patents and trade secret, company image. So internal, what is about the internal environment? This internal environment of the business include all the following exception. So internal environment is the factor which is controlled by the company or by the organization, So internal environment which include your company culture, it's also include patents and trade secret, it's also include company image, it's also include employees, it's also include management, organization, structure, and etc. But when we are talking about the option number B, customer are the part of external environment. Okay, so customers are the outsider of the company. So that's why the internal environment include the company culture, patent, trademarks, and company image. But there is question is except. So customer, option number B will be the exception for this question. Now the next one, balance of payment includes component. Balance of payments include components. Okay, BOP, it's record all the economic transaction between the residents of the country and the rest of the world. So the key component of the BOP is what? Current account, capital account, unilateral payment account, official settlement account, or revenue account, P&L, capital account, official, or the trade account, activity account, revenue account, and currency account, forex account, trade account, or the fund account. So what will be the right answer? Here the right answer is option number A, because BOP, balance of payment, is directly connected with your current account, capital account, which we prepare in the to see the balance of payment, unilateral payment account, and the official settlement account. In the current account, it's included trade in goods and services, income, and from the current transfer like a remittance and the goods. We have seen the last question. Okay, previous year question. Now capital account, it's record all the capital transaction like your acquisition or the disposal of non-produce or non-financial asset. Unilateral payment accounts, it helps to offer, includes the current account, refers to the one way transfer, kind of your no exchange, like your gifts. Okay, like your gifts and remittance, these are we mentioned in the unilateral payment account. Official settlement account is also called as reserve account, Okay, actually this account managed by the central bank to adjust the BOP imbalance. Okay, if there is any, see there is an BOP imbalance, so this account will help to settle the account. Okay, and there is another one account, that is the financial account. So this financial accounts include investment like your FDI, foreign direct investment, include the portfolio investment, it's include the loans. Okay, so this is, so option number A will be the right answer. Next, which one of the following is the main objective of the fiscal policy in India? So what do you know what is a fiscal policy? Fiscal policy in India refers to which is governed and controlled by the government of India. Government uses policy or the government uses of the taxation and the experiments is influence the economy. So main objective of fiscal policy for the economic growth, reduction of the income and wealth inequality, then empowered employment generation and price stability. So option, the main objective of the fiscal policy in India is given, that is to increase the liquidity in economic. Isn't it true? To promote the price stability, to minimize the inequality in the income and wealth, or to promote the employment generation. So what do you mean? What will be the right answer? So right answer will be option number A, increase the liquidity in economic, because the monetary policy of India. Okay, so actually which one is the main objective of the fiscal policy? actually this is a which one is not the main objective of fiscal policy, because fiscal policy objective is to promote the price stability, minimize the inequality in income, wealth, and promote the employment opportunity. These are the main objective of fiscal policy. But increase in liquidity in economic, this is the main objective of monetary policy. So that's why this is a printing mistake, that is which is not the main objective of fiscal policy in India. This will. Next question: which of the following will be is related to the contribution analysis are true? Option number 1: if contribution is 0, there is a loss equals to fixed cost. If contribution is negative, loss is less than fixed cost. If contribution is positive and more than fixed cost, there will be profit. And if the contribution is positive and less than fixed cost, there will be profit. So understand the one by one. First of all, there is a proper format to calculate the contribution. So from this sale, when you reduce your variable cost, so you will get a contribution. Okay, so I will just draw it. From the sale, you have to reduce the variable cost, you will get a contribution. From that contribution, when we reduce your fixed cost, so you will get a profit or loss. Okay, now read one by one. If contribution is 0, suppose this amount is 0, there is a loss equals to fixed cost. Yes, so if your contribution is 0, so here you will get loss, and this loss is equals to this amount, because your contribution is 0. So first statement is true. Okay, the second statement, that is if contribution is negative, suppose contribution is negative minus 10,000. Okay, loss is less than the fixed cost. So in that condition, suppose your fixed cost is 50,000. So what will be the your your loss? Obviously, because contribution there, if there is a negative contribution, then you will face a losses. If there is positive contribution, then your company will get a profit. So here is loss of 40,000. So what is saying, if the contribution is negative, loss is less than the fixed cost. No, this is 60,000, 50 plus 10. So here the 60,000 loss, so this is wrong. Okay, then if the contribution is positive and more than the fixed cost, yes, suppose contribution is 1 lakh and your fixed cost is 20,000, so there will be profit. Yes, there will be profit. True, the statement number 3 will be true. Then if the contribution is positive, that means suppose 1 lakh and less than the fixed cost, contribution is positive but less than the fixed cost, that means your contribution is suppose 20,000, this is your contribution, and your fixed cost is 30,000. So there will be profit? No, there will be loss, because your contribution is less. So here you will face loss of 10,000 rupees. Okay, so yes, the statement number first is true and third one is true. Okay, first and third. So option number C will be the right answer. This one will be the last question of today's session. This is actually numerical question. A firm's monthly cost of production is 1,46,000 at an output level is 8,000 unit. If it achieve an output level of 12,000 unit, it will incur production cost of 1,86,000. Cost of production for the 15,000 unit will be. So how do you calculate? First of all, you have to, you know that in this question there is units are increasing gradually, so these increase in units. First the units are 8,000, then 8,000, and they are reached to 12,000. Okay, so what will be the difference? 12,000 minus 8,000, so you will get 4,000 unit, isn't it? Then as unit is increases, his cost also increases. Okay, so here you can see before there is a cost is 1,46,000, later on the cost will be 1,86,000, so you have to make a difference of that. 1,86,000 minus 1,46,000, so difference will be 40,000. Okay, okay, so here you can say that is variable cost, variable cost per unit you have to calculate. So you know that is 40,000 is your rupees amount, you have to divide with your unit number 4,000, so you will get variable cost per unit. So rupees 10 is your per unit variable cost. Okay, this is the first step. Later on we have got, I'm writing over here, variable cost per unit is rupees 10. Okay, now then you have to calculate the this is we got fixed variable cost. Now you have to calculate the fixed cost. Okay, fixed cost. So as per given in the question, first initially the units are 8,000 units. Okay, and if there is an 8,000 units they are producing, so you have to multiply this with rupees 10 with your variable cost unit. Okay, so you will get 80,000. Okay, this is your, now what you have to do, in the initially the amount is 1,46,000, so rupees 1,46,000. Okay, so how do you calculate your fixed cost? You have to calculate your fixed cost from this 1,86,000. When you reduce, this is not fixed cost, this is variable cost amount. Okay, this is your variable cost. Okay, and you sell, from the sale amount is 1,46,000. When you reduce your variable cost, is 80,000. Okay, so you will get a contribution. So this contribution is 66,000. Okay, now this contribution is nothing, if anything is not given, so what you have to do, this is called as your fixed cost. Okay, this is called a fixed cost. So if you want to calculate the total cost in this question, so fixed cost what is your fixed cost? Fixed cost is 66,000. So in this 66,000 there is a 15,000 unit is here. You can see we have to calculate the cost of production for the 15,000 unit. For the 15,000 unit, the variable cost rupees is 10. So here plus 1,50,000. So you have to add this 1,50,000 to 66,000. So you will get 2,16,000, and this 2,16,000 is the total cost. Okay, so 2,60,000 with the right answer. Okay, so this is a way you have to solve this kind of questions. Okay, so thank you so much for watching.